Welcome back, Wealth Builders. Thanks for joining. Today we're going to talk about whether or not you should invest in Bitcoin. Before doing so, please remember, I'm not a financial planner. I'm just simply someone who is providing financial education and financial literacy to help you build wealth over time. Please hit like and subscribe. Before answering the question of whether or not you should invest in Bitcoin, it's best that you first understand what exactly Bitcoin is. So what is Bitcoin? Bitcoin is a digital currency created in 2009 following the housing collapse. Satoshi Nakamoto is credited with coining the idea, but this is just a pseudonym as the real identity is still a mystery. There is a finite amount of Bitcoin that will eventually be fully mined, thus limiting the amount of total Bitcoin that will be in circulation. The advantage that Bitcoin tries to offer is lower transactional fees when compared to current currency exchange systems. As we explore whether you should invest in Bitcoin, you should consider the risks and the benefits. Risks investing in Bitcoin. Not physical. There are no physical Bitcoins, and balances are documented publicly as well as transactions. The transactions are tracked on a decentralized ledger referred to as a blockchain. This is run by multiple servers on the cloud. Acceptance as a currency. Bitcoin is not backed by banks or governments, well, at least not yet. It is not yet widely accepted as a currency, which is the initial intent. You still can't go to the grocery store and say, yes, I would like to buy 1 pound of chicken and some pasta and some toilet paper and some M&Ms. How will you pay for that, sir or madam? Well, I'd like to pay for them with 1/100th of a Bitcoin, please. Yeah, that's not going to happen. Not yet. Volatility. The value of Bitcoin is volatile. It reached a value of $20,000 per coin in 2017, but fell to less than half within 2 years. It is currently reaching highs in 2020. The intent of the creator of Bitcoin was for it to act as a currency alternative. However, speculation over the years has generated volatile swings in value, leading many speculators to both win and lose big. Drops as high as 80% have been reported in a single day. Let's pretend the same thing happened to the US dollar. A 60 to 80% drop in value in a single day. Would countries continue to peg the value of their currencies to the dollar? You know who says, yeah, I bought Bitcoin at the peak and I lost 20,000 and it was awesome. You know who says that? No one. No one says that. Yeah, no one says that because people don't like to share losses. People only share wins. But make no mistake, thousands of people lost millions of dollars when Bitcoin lost its value. Intrinsic value. Its value is based on what people deem the value is. Let's compare Bitcoin to your favorite company. Google, Apple, Microsoft, whatever company you like. Your favorite company engages in the act of producing goods and services that people buy. The company then renders a profit, pays workers, adds to the economy so that it can grow and then produce even more goods and services so that the cycle can continue and repeat. As a result, value is produced for investors, employees, consumers, and the economy as a whole. Compare that to Bitcoin, which its value depends on what people decide it's worth. Investing in the stock of an established company with solid financial fundamentals in an industry that's either growing or is needed long term is a much less risky investment. Not insured. If you deposit cash into a bank account, it is insured by the Federal Deposit Insurance Corporation. No such protection with Bitcoin. Hackers. Several high-profile Bitcoin heists have already occurred. Hackers have stolen millions, and unfortunately, they remain at large, and the Bitcoins are still missing. Taxes. Currently, you are unable to hold Bitcoin in tax-advantaged retirement accounts. Not that I would recommend it, but you can't hold them in 401ks, Roth IRAs, and other retirement accounts. Alright, time for some benefits. Simplify transactions. Bitcoin has the potential to simplify and lessen the cost of transactions. As time passes, acceptance may increase, reducing some of the transactionary fees and challenges that are present today. Transparency. A decentralized ledger should make transactions easy to track and create trust among participants. Regulation and acceptance. The rise in popularity has required governments to act and begin to regulate Bitcoin. Although warnings and caution are still recommended, Bitcoin regulation will be a good thing for the consumer. As consumers, we should welcome regulation and consumer protection. If you were keeping track, there are more risks to investing in Bitcoin than there are benefits. This is the reality today. Will it change over time? Maybe. So, should you invest in Bitcoin? It may depend on your personal situation, but if you are serious about building wealth, sure, you can invest in Bitcoin, but as is true with any other investment, it has risk. And in this case, it's very risky. As a result, if you do decide to invest in Bitcoin, please limit your holdings to a fraction of your overall investment portfolio. And understand, its intent and design was more so a currency rather than an investment. But most importantly, see a certified financial planner. A planner who is certified by the CFP board has a fiduciary duty to put your interests before theirs. So wealth builders, do you think Bitcoin will keep rising? Will it plummet like before? Please comment below. Thanks again for stopping by. Please like this video and subscribe if you found value in this information. Please also do someone else a favor and take the time to tell them something nice or something you appreciate about them. As always, I hope you have a great day.